First here, Bitcoin funds saw the largest single week of outflow since June 2021. Institutional investors have been selling more Bitcoin investment products recently, with over $133 million worth of investments being shed last week. This is the largest outflow since June last year. According to CoinShares' weekly digital asset fund flows report, the overall digital asset fund outflows for the week ending April 29th totaled $120.1 million. The large Bitcoin outflows were offset by a surprise $38 million worth of inflows for FTX token products. BTC funds lost $132.7 million last week, resulting in a total of $310.8 million in outflows for April. The last time BTC funds saw this level of outflows in a single week was during a strong bearish trend in June 2021. This was likely due to major FUD in the news, including Tesla halting BTC payments for its cars over environmental concerns and China rolling out its crypto mining ban. CoinShares noted in their report that there doesn't seem to be a strong indicator of why sentiment had taken a turn for the worse last month. They speculated that it might be due to a couple of factors. And let's see what those are. The price of Bitcoin has decreased by 18.2% in the past 30 days to sit at $37,970. Many people believe that this is due to fears of inflation and the Federal Reserve's upcoming interest rate hikes. What do you guys think? You think that is, you think the interest rate are going to high? I mean, they've already started to go up. How do you guys think that this is going to affect Bitcoin price and other cryptocurrencies as well? Institutional investors have been pulling their money out of digital assets in general, with $326.1 million pulled out of products tracked by CoinShares. This suggests that investors are concerned about the overall risk of crypto investments. CoinShares reports that although this reflects some pessimism, it is not as bad as the outflows at the beginning of the year. 41% of the outflows were from the Americas, while 59% were not. They were from other countries like Europe. There is that. There is other related articles here. If interested, you can click on those. Up next here, Ethereum prints bearish technical pattern. Why ETH could resume the downtrend. Ethereum attempted to break the $2,900 resistance level, but failed. ETH has since struggled to clear the 2880 level and has started a fresh decline. ETH USD declined sharply below the 2850 and 2820 support levels. The price even broke the 50% fib retracement level of the last wave from the $2,718 swing low to the $2,881 high. There was also a break below a key rising channel with support near $2,820 on the hourly chart. Ether price continues to move lower and is now below the $2,820 level. The 100 hourly simple moving average is also providing resistance near the current rate. Additionally, the 76.4% fib retracement level of the last wave from the $2,718 swing low to $2,881 high is acting as a strong resistance. The price is now consolidating near the $2,790 level. On the upside, an initial resistance is seen near the $2,800 level and a connecting bearish trend line on the same chart. The next major resistance is near the $2,820 level. If Ethereum fails to gain pace above the $2,820 resistance, it could continue to move down. An initial support on the downside is near the $2,750 zone. There is a major support level at the $2,720 level, and if it is broken, the price could go down. If that happens, there's a risk of it going down to $2,600. There are some technical indicators here. What do you guys think on ETH price? I know I asked that before. I just want to know what some of your predictions are. I like to see comments in regards to that and kind of see where everyone stands. Up next here, Coinbase took out the first Bitcoin-backed loan from Goldman Sachs. Coinbase, America's largest crypto exchange, was revealed to be the mystery firm that took out Wall Street's first Bitcoin-backed loan from Goldman Sachs. With over $2.5 trillion in assets under management as of 2021, Goldman Sachs is one of the most well-known and respected investment banks in the world. Bloomberg reported on Tuesday that the Bitcoin-backed loan issued by Goldman Sachs had been taken out by Coinbase to deepen ties between the crypto and traditional finance worlds. Do you think that's a good move? It seems like it at this point. Let's read on further. Coinbase has secured a $300 million loan backed by a portion of the company's Bitcoin holdings. While the dollar value of the loan has not been disclosed, it was collateralized by 4,487 Bitcoin, worth around $170 million today. The loan features 24-hour risk management, but requires Coinbase to top up its BTC collateral if prices fall too low. So interesting that they put that stipulation in there. Many people view Bitcoin-backed and other crypto-backed loans as commonplace in the crypto industry. This is especially true on decentralized finance or DeFi protocols. However, in traditional finance, crypto is seen as too risky and volatile as collateral. They're right. This is a huge move for the crypto sector and the traditional finance world as well, that this loan was taken out on one of the biggest, platforms. While some potential borrowers are interested in this type of financing, asset management firm Arca wrote in a May 2nd blog post that they are looking for more options. The company said that this loan demonstrates the willingness of institutions to utilize new tools with old techniques. News of the Bitcoin-backed loan sparked commentary on Twitter. Regarding the loan, Bitcoin podcaster Preston Paish tweeted Wednesday, "No wonder the SEC is hiring people." So you can see the tweet there. It seems like anytime anything big happens, people take to Twitter, right? Meanwhile, Coinbase CEO Brian Armstrong has spoken out about the importance of free speech on decentralized social media platforms. Armstrong believes that under new owner Elon Musk, Twitter has an opportunity to essentially embrace using a decentralized protocol, which the platform could operate on. What do you guys think? You think that's going to happen? Elon Musk seems to want to bring a lot of new changes to Twitter, so we'll see. Armstrong believes a decentralized social media platform would allow content creators to make their own moderation policies. This would prevent certain content streams from being stifled on a platform and allow users to see whatever they choose to. That is very controversial. There's a lot of back and forth on that. They want free speech, but not too much free speech. So, we'll see how this affects Twitter. If Twitter doesn't hop on the bandwagon, Armstrong warns that there are other teams developing decentralized social media platforms, which he calls DeSo. On these platforms, users can maintain their own identities. Since 2019, Jack Dorsey, the founder of Twitter, has been working on a decentralized social media platform called Blue Sky. The platform is designed to give creators more control over their relationships with audiences and allow developers more freedom to build. That is pretty interesting. And Blue Sky has a tweet here. Talk about the relationship. I'm sure we'll hear more about that to come. Up next here, South Korea's new president delays crypto taxes in favor of consumer protections. On Tuesday, South Korea's newly elected president Yoon Suk-yeol announced his plan to delay taxation on crypto investment gains until a new set of regulations called the Digital Asset Basic Act is enacted. Yoon, South Korea's finance minister, has announced that the country's crypto tax will not be coming into effect for the 2022 fiscal year. The law was pushed back to 2023 last December, and Yoon is ensuring that it does not come into effect until reasonable legislation is in place to protect consumers. This could be by 2024. I think that's very commendable that they're doing that. I think a lot of other countries should follow suit. The president-elect's presidential transition team has been exploring its options in delaying the tax since March, when Yoon won the election. They believe that there was insufficient legislation in place to justify levying taxes on digital assets. Totally agree. I think countries are just trying to hop on and tax crypto, and there's not enough legislation on how to do so effectively. I see that a ton here in the United States. DABA is a financial regulatory act conceived of by the Financial Services Commission, FSC, this year. It contains a series of laws related to consumer protections, including token issuances, NFTs, centralized exchange listings, international finance as it relates to crypto, and a response to U.S. President Joe Biden's executive order on crypto. The FSC plans to introduce a crypto insurance system through DABA as a backstop measure against hacks, system errors, and unauthorized transactions. So that sounds pretty interesting there. This legislation, which has been delayed again, would tax crypto investment gains at a rate of 20%. The bill would apply to investment gains above about $2,100 per year. That rate seems pretty low. I think right now the traditional capital gains tax, at least here in the US, is like 33%. Maybe it's higher, but as far as I know. So that's pretty low. A representative from the FSC told eDaily on Tuesday that taxation of investment income from virtual assets should be done after investor protections are in place. Cryptocurrency venture capital firm Hashed CEO Simon Kim agrees that it doesn't make sense to impose a tax on cryptocurrency until the government enacts relevant statutes which clearly state cryptocurrency-related businesses' scope. As the FSC works on new bills as part of the DABA initiative, Yoon plans to establish the Digital Industry Promotion Agency to act as a reference point for regulatory issues in the crypto industry. Pretty interesting. I totally agree with that. I think, like I said, you can't really tax something clearly and fairly until you have clear and concise regulations in place. So it's cool that they have, been made aware of that and are trying to do something to help that. Up next here, this is why the Cardano whales can start a rally. ADA price could hit $1 by the weekend. In light of the recent whale dumping and crypto crisis, Cardano has plunged in price to a low in over a year. While this may seem discouraging to some, the lower cost of the token is attracting huge whales who are buying up significant amounts of ADA. This sets the stage for a future rally in the price of Cardano. The ADA price is currently at 0.7919, which is near its lowest level since June 2021. This year, the token has lost approximately 40% of its value, making it one of the worst performing cryptocurrencies. Wow. We still love ADA though here. However, on-chain data suggests that ADA's nearly 1 year low appeared to be the bottom of the token. It is currently up about 6% from its lowest point, and the whales seem to have been building up over the last 5 weeks. Have you been hoarding ADA? What are some of the top coins that you are investing in, getting in right now while the prices are low? Sentiment data indicates that over the last 5 weeks, ADA whales have purchased more than $196 million worth of ADA. Addresses with 1 million to 10 million ADA are the ones who have been buying the most. This suggests that the whales are entering into a hoarding mode. This follows a 7-month whale offloading spree that saw ADA prices drop by more than 300% from an all-time high in September 2021. ADA still faces a challenging market with rising inflation and concerns about interest rate hikes. The number of daily transactions on the Cardano blockchain increased by approximately 14% in April. That's encouraging. The number of active addresses increased throughout the month, indicating that the blockchain was still attracting new users. Yeah, I think, with how volatile everything is right now, a lot of people are leaving, but the tried and true are staying on. People who really believe in crypto know that this is not the end. ADA was recently included in a grayscale fund, attracting interest from many institutional investors. ADA trading patterns have shown that large trading houses have been moving more tokens, with transactions exceeding $100,000, making up the majority of daily volumes. So whales are still getting in on ADA. Are you? Again, I want to know what coins you guys are getting into. And last but not least here, Bitcoin-friendly Republican candidate J.D. Vance wins Ohio Senate primary. I always love when crypto-friendly candidates get in. J.D. Vance has won the Ohio Republican Senate primary election. This makes him the GOP's candidate in the highly anticipated Senate race against Democrat Tim Ryan, in which both parties are trotting out crypto-friendly candidates. According to The Guardian, Vance may have been pushed to victory on Tuesday by a last-minute endorsement from former President Donald Trump. This helped him beat out presumed frontrunner, the former state treasurer Josh Mandel. Both Vance and Mandel are supporters of cryptocurrency, which is really cool, with Mandel famously tweeting, "Ohio must be a pro-God, pro-family, pro-Bitcoin state." It's interesting to see which candidates are pro-crypto and why, and what backgrounds they come from, because you have them on both sides. Vance has disclosed Bitcoin holdings valued at up to $250,000, which at today's value could be about 6.5 coins, according to CoinGecko. He was also backed by Bitcoin proponent and billionaire investor Peter Thiel through a super PAC. Bloomberg reported on April 20th that Thiel donated $3.5 million to the Protect Ohio Values super PAC. Democrat Tim Ryan is in favor of a law that helps simplify the digital asset tax reporting requirements. A recent CNBC report highlights how cryptocurrency investors are also having a noticeable impact on the upcoming midterm elections. It's pretty interesting, and I love to see how crypto is infiltrating our government and how far we've come in just a short period of time. Largest among them appears to be CEO and founder of crypto exchange FTX, Sam Bankman-Fried. SBF has been a high-profile political donor since the last presidential election, which he was the second largest financial contributor to President Joe Biden's campaign. SBF recently formed a political action committee, or PAC, called the Protect Our Future PAC. The PAC has raised over $14 million as of March 31st. And CNBC reports that it could be used to have a dramatic impact on the upcoming elections. There are also the GMI PAC and the HODL PAC, which hold a combined $6.3 million and which are backed by other FTX employees to support midterm candidates. Pretty interesting there. However, some candidates who have declined funding from PACs may take issue with all the crypto money flying around. Democratic Ohio State congressional candidate Nina Turner tweeted on April 15th that she is not for sale, alluding to opponent and victor Shantae Brown, who accepted PAC money for her campaign. Again, it's all a matter of, personal preference. If you are into crypto, you are. If not, then you're not. People's minds change. That's not anything very surprising, but it's cool to see that crypto is just infiltrating government, not only in the United States, but in other countries. And how they are wanting to regulate tax and things like that, which, some see as bad, but also that means that, I don't think it's going anywhere. But that is it for today. Thank you guys so much for watching. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.